Hi, and welcome back to the Business Career College video series. In this set of videos, we're going to look at health and dental insurance. Now, we're pretty fortunate in Canada as far as our health and dental expenses go, in that it is fairly unusual for somebody to end up with a very large bill for their health expenses. Generally speaking, if I go into the hospital for something that's medically necessary, then I'm going to walk out with no bill at all, or potentially a small bill for things like use of a private or semi-private room or parking or something like that, but relatively inexpensive. Now, this is sometimes also referred to as major medical insurance. You'll sometimes see the term major medical or extended health care as well. So lots of different names for what's really the same thing here. So this variety of programs, our major medical, health and dental, extended health care, whatever, is really designed to fill the gaps that exist in our provincial health care plans. So whatever province you're in, you have a provincial health care plan where your government provides your basic level of health care for services that are deemed to be medically necessary. So you know that you're going to get medically necessary services covered. That's generally things related to a stay in the hospital, some surprising things that aren't necessarily covered. One of the things that's often a shock the first time you have to pay for it yourself is, for example, getting to the hospital in an ambulance is not generally covered under a provincial health care plan. You might end up with, as I mentioned, a bill for a semi-private or private room while you're in the hospital, so you want some enhanced services. Semi-private or private accommodations are a good example of something you're going to pay for. Prosthetics are generally not covered, and that includes all sorts of assistive devices that may not be covered. If you want, generally a very basic type of artificial limb would be covered, but then things like nicer artificial limbs or hearing aids or the like are not necessarily going to be covered. In some provinces, diabetic supplies may not be covered. Unless you get them very specifically in the hospital as part of a regular treatment regime, your prescription drugs are not going to be covered. And we could go on with the list. There's all kinds of things. Most of your paramedical services and your paramedical services include things like massage or your chiropractics, holistic medicine, that whole range of stuff. And then, of course, most vision care is not covered. There are exceptions for children and for seniors, but for the most part, vision care is not covered, and most dental care is not covered either. Now, there is a range of other services that are excluded generally from your provincial plan. Cosmetic surgery is generally not covered unless it's medically necessary, and elective procedures are also generally not covered. And I should mention that not all Canadians necessarily receive coverage under provincial health care plan. There are some people who receive coverage under federal health care. Generally speaking, that applies to status Indians as well as members of the armed forces and the RCMP. They'll get service from the federal government. So we have these services that may not be covered. Well, what you might want to do then is you might want to put in place some insurance to cover this off. Now, if you know how insurance works, you probably recognize that an insurance company is in business to make money. So here's what you might have. If we have somebody for whom we have expected claims, so let's say that we have a person or a family where we expect claims in the neighborhood of, let's say, $1,400, the insurer says, well, we need to make some money at that. In order to make some money at that, we're probably going to charge premiums in the neighborhood of, let's say, $2,000. Okay, just for the sake of argument, this would mean, incidentally, and you see this in group insurance, not so much in individual insurance, but 1,400 out of $2,000 is 70%. That's a 70% utilization that the insurer is expecting, or in group insurance, you'll see this term, a 70% target loss ratio. So this begs the question then, why would somebody do this? Why would I pay a premium of $2,000 to get services that I expect are only going to be in that $1,400 range? Well, there are several reasons why I might. And one is because I might be concerned about catastrophic claims. So while we expect claims to be in the $1,400 range, when you look at, how about prescription drugs are a good example of a place where you can have very large claims. There's a commonly prescribed medication today, a biological drug prescribed for rheumatoid arthritis or for Crohn's disease, among other conditions, called Remicade, and Remicade can run up to $20,000 per treatment. Another reason that you might be willing to pay this difference is there are some substantial tax advantages to doing this. And your tax advantages come from the fact that as a self-employed person, these premiums would be tax deductible. That is, if you're self-employed or you own your own business, and then any money you receive as a reimbursement for health expenses would be tax-free. So that can end up being a substantial advantage. There is a third reason, and it might be that you prefer to spread your health expenses evenly over a period of time. That is, this can be effective for budgeting purposes. Now, this leads to some questions as well. That is, from the insurer's perspective now, they want you to buy this policy. They want you to spend this money. They want you to have coverage that is attractive enough to keep paying premiums, but they also want you to, in a typical year, have claims that don't exceed that $1,400 limit. So this is where insurers put some limits in place or some controls to make sure that you're not going to go beyond that $1,400. So some examples of some of these limits or controls come about first off with some cost sharing methods. And cost sharing are really methods by which the insurer says, okay, we'll pay a portion of that cost, but we're going to pass on a portion to you as well. And that portion might come about in the form of a deductible. And a deductible is a dollar amount, such as $25 or $50 or $100, and it's normally reset annually or sometimes every second year with certain types of benefits. We can also have coinsurance. And what coinsurance does is it says, okay, for every claim you submit, there's going to be a limit here. So, for example, the insurer might pay 80% of every claim, which might also be expressed as a 20% copay, meaning that you're paying 20% of every claim, or you could have a 90% coinsurance, which would then mean a 10% copay. So the next set of limits or controls we put in place come about where the insurer says, okay, here's what we're actually going to cover. So they will have maximums of some sort. And these maximums can come a number of different ways. So, for example, we might have recalls. This is common with dental and sometimes with paramedical services as well. And here you would say you can get one cleaning per family member every, say, 9 months. That would be a 9-month recall. We have a fee guide associated with dental expenses, which says these are the expenses that are reasonable and customary for that particular type of dental work. If you choose to go to a dentist who charges you more than that, we'll still cover it, but we'll only cover it up to that fee guide limit. With prescription drugs, we have what's called a formulary. And a formulary is an agreed upon list of prescribed drugs that will be covered. So a list of covered drugs here falls under a formulary. And we might have a time limit or a minimum amount of premiums that have to be paid. So for example, you might have to pay 2 years of premiums before you have ortho coverage, before you can get any orthodontic coverage. Speaking of ortho coverage, it's very common to see a limit here, and it might be an annual limit, or it might be a lifetime limit. Again, if ortho's even covered under your plan, it's very common to see this kind of thing, where you might have maybe no more than $1,500 of ortho coverage for 1 year, and maybe a total maximum of $2,500 of ortho coverage for the entire lifetime of the plan. So insurers apply these limits to a number of different services, to pretty much everything that's offered in a health and dental plan, actually. And by doing this, they're going to keep those claims down to a manageable level. I hope this helps you to understand how health and dental insurance works. It really is going to come down to which of these benefits do I need. It doesn't make sense for everybody to purchase health and dental insurance, but it certainly does help, especially in the instance of a catastrophic claim, and as mentioned, a self-employed person can benefit substantially from the tax advantages. Thank you very much. We will be covering the coordination of benefits in a separate video.